All right. So today I started using the Keltner channels at a standard deviation of 4, set at 100 ATR, or average trading range, and then an EMA of period of 50. The price seems to react to the 50 EMA. ATR period of 100 smooths out the, um, I guess, ATR multiplier, not the standard deviation. Um, and what we're left with is these two areas that are helpful in determining where price potentially could reverse. Um, I use it as a momentum indicator, essentially. It's okay, let's just go into an example. So right here, price comes out and almost confirms above, but not quite. Now, if this had confirmed, it probably would have launched off, but as you can see on the 1 hour over here, um, we had this level and these levels to look for, so I don't think anyone was wanting to buy it up there. But essentially, it comes up to the top of this area, and it'll either come midway down or reverse price. We can use sometimes divergence, like this one had a little bit of divergence, and a little bit of trend analysis. So just a simple trend line. Is it breaking it? Well, in combination with hitting it an incredibly high Keltner, I'm just going to call it a Keltner value. You got your call influence with your RSI overbought level, right? And that's probably going to reverse. And you go down to the bottom side. Um, just kind of a shorter term. No, not so much shorter term, right? You got this pullback after a downtrend. Try and see what people want. If we come up back into this range, do we accept it? We reject it, and we continue down further. But right about here, price was coming down and through, and then decided to stop and temporarily reverse in the other direction. And so we could potentially be able to spot that by price coming way out of the Keltner channel and then coming back in, confirming a higher low. MACD also over here is showing positive, still below the midline, but showing a positive change. And this second low here on this double bottom of sorts did diverge as well. And so then we continued up. And really what the Keltner channels are doing is just helping to know when that reversal potentially could take place. Um, it has to be combined with your peak and trough progression analysis. So if you have, lower lows right? It's probably not going to reverse immediately when it comes in. You just got to buy it. So you have to wait, be patient, and then take the trade when it's come back into the channel, and you can see that peak and trough of progression has reversed. That's borderline, probably, yeah. So that wasn't very strong. So there's a couple of good trades. That's the reversal as it comes in. The almost even better trade doesn't come up as frequently is actually this trade right here. Price breaks through the channel, and then it comes back, retests, and then closes below its previous low, or the candle's previous low. Doesn't so much matter if it closes below the wick or the main body. You'll try and get in on the 1 minute anyways. But you're just looking for that continuation of the direction. Also, you want to co-influence it with higher time frames. So, this was a really good setup because we had broken the resistance, somewhere around here, and not even come close to actually entering back into this range here. Instead, just testing off of this wick barely, not even really making it up there. That in combination with this retest, that's most likely going to be the direction for the rest of the day, from what I've seen. Now, I've only used this for 2 days now. I've been looking at movements like this for a while, but and we've done probably, I don't know, 3 or 4 months worth of back testing, just visual back testing on a different account here because this doesn't go very far. But in the patterns that I'm seeing, this is a really good entry. If your risk parameters are too high because you're entering on the 10-minute on the NASDAQ, you'd be like 500 to 1,000. That's a little bit too high for you. Find a trade on the 1 minute. And so I'll just go through today's trades, I guess, and the ideas behind those trades. Yeah. Anyway, so what we were coming up on, and this was kind of a premature trade. Still trying to figure out how to effectively get in and out of these trades. Was this a good trade? Not really. No, it was bad. But the idea was that we were coming up on the Keltner, this bottom, and we rejected it. And what it looked like on the 1 minute, I guess this is the 2 minute, we'll go to the 1. Whoa. All right, here we go. Here we are. All right, I also have these deviations 1 hour apart. That is in order to give me a better grasp on what's going on inside one of these candles over here. How did that candle form? Really, what I'm trying to do is trade the 1 hour by using this sort of reversal ideology with the trend analysis on the 1 minute, or I mean, a 1 hour, and entering on the 1 minute. So that's why we got 3 screens up. So this first trade was rejection off of the lower Keltner band, and we confirmed above the previous low on the 1 minute. So we entered and we took a profit at the middle, or the middle deviation. I don't know. And then the second trade was the failure to confirm above this middle deviation. That's what's going to be called. If this would have confirmed here, it could have been very plausible that this would have become a pullback and we would have bounced off of this area. But that didn't happen. It dropped through. One thing, you could see it here very well in that the candlesticks actually move faster. So you'll see these kind of move candlesticks. And they might move slow. Most of these are very large. They're on the 1 minute, so relatively large. Price is going to move really quickly when a movement is taking place that people are trying to get into. So saw the rejection on here. It had confirmed below the median deviation, but let's say midline deviation. Now I'll just say Keltner midline. Okay, so it's Keltner midline. It hadn't crossed below the Keltner midline, but it had confirmed a trend reversal on the 1 minute. So that's an entry. We were trying to take off at the openings low. That's just where price was, that's another good potential stopping price. And you can see that it actually came up, it went through that, so it's not super strong, but it did react to that level on the way back up as well. So price at that point started going down. Heat map. Okay, now I've got to include this. So there's something called heat map. This guy, Think with Bookmap. He's great. All right, he's not on right now. Think with Bookmap. Let me explain that. So it's essentially a heat map. Bookmap is incredibly good at making a visualized order flow. That way you're able to actually see the DOM play out through history or historical time period, whatever you want. It can be 10 seconds, it can be 4 weeks, who cares? It's going to build these little volume dots and essentially tell you where people are trading and where that volume is. Now it's a lot like this, little volume profile, but it's a lot more in depth. So this is just stacking throughout the day. Doesn't really tell you what's going on in the minute. This 1 minute, right? So that is going to tell you with a definitive number exactly what is trading at that second, down to the microsecond at the price level. If that makes sense. So we used that in the market pulse that he provides in order to have sort of an auditory cue to enter into the trade, right? So you can hear the volume begin to pick up around these areas. And, I'm sure in the moment, POC also changed. So it probably went from about here and flipped back up to here. and you can see everybody taking their profits, and then you can go ahead and see them reversing to the short side. And looks like I left a little bit of profit on the table, but the idea is there. And so over the next couple of weeks, that is what we're going to work on. And I'm going to try and do updates every day and just practice this video documentation of the process of learning how to trade. And maybe someone out there will be able to interpret my gibberish and have a successful trading career. That's it for today. I'll be back tomorrow.